Trading is alive right now. Clean reactions, sharper ranges, real signals under the surface. Give me 45 seconds and I'll hand you the map. The one level that flips BTC, the trigger that makes XRP real, and how a new cash rail could change your timing today. We read filings and order books so you don't have to. Stick around for the BTC and top alts read at the end. Educational only, not financial advice. Here's what shifted and why it matters. As reported today, Christie's is winding down its standalone NFT department and folding digital art into its broader 20th and 21st century category. They'll still sell NFTs, but the art market's contraction and fee math likely pushed the restructure. That's a signal, not a eulogy. For traders, it means selective demand over spectacle. Fewer headline jolts, more truth at the bid. Actionably, watch depth and spreads. If premium collections show tighter books and reclaims that hold during session overlaps, there's a trade with defined risk. If the book stays thin, pass. Trade the retest, not the headline. Define invalidation under structure. Take partials into nearby liquidity and step aside if the retest fails as calmly as you entered. Under the surface, the rails are forming. Sky just pitched a genius-compliant USDh stablecoin with an $8 billion balance sheet and a 4.85% yield per coverage today. Strip the buzzwords and you get a simple idea. Regulated, yield-bearing cash is moving closer to where institutions actually click. When cash has rules and audits, the corridor opens. Basis smooths, off-hours gaps shrink, and venues that plug in feel truer. That shifts timing. If you observe steadier spot demand and cleaner reclaims on pairs linked to these rails, lean small with tight invalidation and a time stop. If it's still thin, I skip. For tokenized cash impact, I'm watching intraday rhythm on majors. Smoother basis, fewer air pockets around closes, better fills on rails-connected venues. If I see it, I favor those windows. If not visible yet, keep it on watch and save your risk for levels that answer you back. Liquidity over lore, every time. Now the timing cue. XRP jumped about 4% as Fed rate cut odds spiked toward near certainty as reported today. That's classic. Policy easing nudges risk on, but don't buy the headline, trade the invite. If XRP reclaims your marked line on rising participation, firm volume, honest spreads, buy the retest with invalidation tucked just below. Take partials at nearby pools and let the rest work while structure holds. If the level is lost on strong activity and a second attempt fails, stand aside. No knife catching, no drama. Process beats prediction. Thread these together and you get a week that rewards plans over impulses. A legacy gate is signaling selectivity in NFTs. A compliant, yield-bearing stablecoin pitch is pulling money toward programmable rails. Macro odds are tapping the glass on majors. Bridges, pipes, timing. If the room feels like it's breathing faster, you're not imagining it. The edge is to trade architecture, levels, liquidity, confirmation, not vibes. Now, this is what I'm watching this week. For NFT-adjacent flows, I'm scanning for collections and venues that actually show improved depth and clean reclaims during Euro-US overlaps. If spreads tighten and retests hold, I'll take a small, defined shot with a stop beneath structure and quick partials into nearby liquidity. If it's still thin, I skip. For tokenized cash impact, I'm watching intraday rhythm on majors. Smoother basis, fewer air pockets around closes, better fills on rails-connected venues. If I see it, I favor those windows. If not, I keep my core schedule and stay picky. For XRP, I mark one reclaim line and one shelf below. If reclaim on rising participation, I run the playbook. If not, I wait. Skipping is a position. It pays well over time. A few quiet habits that top desks use when the feed gets loud. Two-source rule before acting on a single headline. If it matters, it survives verification. Trade the retest, not the first impulse. The second touch is where emotion yields to information. Size by realized volatility so your dollar risk stays constant as ranges expand or contract. Use time stops so a pretty idea that won't move doesn't rent space in your head. Keep platform redundancy, a funded backup venue, because the platform you can't access is the one that breaks your plan. Let's land with a clean, conditional read for BTC and top alts. Simple and tradable. If BTC defends the most recent value area and reclaims your line on rising participation, I'll buy the retest with invalidation just below. Take partials into nearby liquidity and trail under structure while higher lows print. If we lose that area on strong activity and fail a second attempt, I stand aside and let the sweep complete. For ETH, if BTC is steady and ETH prints its own reclaim, ideally with healthy L2 activity, same approach, but I'll pay faster because ETH's range expands quickly. For XRP, we keep the seatbelt on. If reclaim, then retest buy with a tight stop. If rejection, do nothing. The market owes us nothing. The plan pays us slowly. Here's your closer, tuned for what works on the best crypto channels. You now have the map, the reclaim that flips BTC, the trigger that makes XRP real, and the timing cue that token rails can add to your day. If this helped you read the room, prove it to yourself. Name the exact level you're watching on BTC, XRP, or ETH in the comments. Saying it out loud locks your discipline. Tap like so you can find this plan when the feed gets noisy. Share it with one trader who needs less hype and more edge. And subscribe with notifications on. Crypto Lens turns headlines into if-then maps you can run today. Breathe once, choose clarity, then trade the level, not the noise.